This is Mitch Firestone with Precision Trading Labs in New York City, and I just wanted to talk to you guys today about a couple of trades that I had on Friday involving the IPO with Dropbox. I had a couple of different trades with a couple of different results, and I figured it might be interesting to kind of go through them with you because they illustrate a couple of different points. Um, the thing that we're looking at right here is what I would kind of consider to be my core setup. I am looking for basically an area of upward price imbalance or downward price imbalance that comes out of an area of consolidation. So in this particular case, this is an area where there was upward price pressure exhibited in the region that's embodied by the yellow box, and I was expecting price to pull back there, and if it actually pulled back to that level at $30, to then rebound and start heading back up again. You may notice up here I am actually using a share bar as opposed to a time chart. When price moves quickly, and particularly in the case of an IPO where there's kind of sporadic volume, where there's these huge surges of volume, it's just I find a lot of times I get greater precision and greater, to use a 50-cent word, granularity using a share bar versus a time chart. So in this particular case, I was using an 80,000 share bar. So at any rate, so when price came back to this region, I was expecting it to then kind of take a bounce out of it. Now, if you remember last Friday, if you were watching the markets, that was the second day of a real major sell-off in the market, and the Dow ended up finishing down about 400 points plus for the day. And I think at this point, it was still a very heavy market, and it was down. The market was definitely in the red at this point, late in the morning or early afternoon. So I was actually kind of cautious about this setup. And so what I was actually looking for was I wasn't going to take the trade immediately as it came off this front line here, but I was actually waiting for it to drill into this zone and then to get some kind of bullish candle that was going to emerge from that. And you can see right there, there's a very bullish green candle there that actually was sitting, pretty much right at its high. And so, in fact, that was going to be my trade trigger. That as soon as it came out of this level, a penny or two above at $30.02, that was going to be my entry. So, in fact, that was how it played out. Price popped up out of there, everything looked good, and it just started up and just immediately collapsed. And I ended up getting stopped out. And disappointing, but that's trading. But I had my stop in here. I got stopped out at 29.55, and that was that. For those of you who trade, you know that even if you're a superstar and you get things right 70% of the time and you get 3-to-1 on your trades, you're a star at that point. But that means you're supposed to be wrong 30% of the time. Well, this trade I caught at least 30%, if not more. So at any rate, I was out. I got stopped out of this, even though I had my setup. But the interesting thing here was, given that this was an IPO, for those of you who trade IPOs, you know that there's always, market makers involved, and there's the whole concept of defending an IPO. And so as a result, companies, investment banks don't want to see their IPOs get what they refer to as having a busted IPO, where the price will actually trade below the IPO price. And so effectively what they do is they defend the price. Now, in the case of Dropbox, it actually opened, the IPO was actually at 21, but in fact the initial print was at 29, which is a 38% premium right at the open where it gapped. So that was the initial print at 29 bucks. So after I got stopped out of this, I was looking at this thing, and I had already plotted on here that where the initial prints were. And I was looking at this, and while market makers will certainly defend the IPO price, which is 21, which of course was not in any danger, they will at times actually step in and kind of, will actually, in a sense, offer up some defense at the initial print as well. Why? Because essentially, if it opens up at 29, they'd like to actually see it close above that, if at all possible. And of course, traders will be looking at that as well as kind of an inflection point. And so I've seen this a million times. And so as a result, when I was looking at this, I was saying to myself, well, all right, too bad I got stopped out, but there might just be another opportunity that if this thing comes down here, you might end up with that sort of quasi-defensive bounce off of here, whether it's through market makers or whether it's through just traders just saying, okay, this thing opened up at 29, and you might just get that bounce off at 29 again. And so as a result, excuse me, I basically set up another trade to basically get in at that point. And I hit the wrong button there. And so as a result, when it came time for that, and what I will do is I will move this into here. Basically what happened was when this thing came down, I ended up then getting in right here, and there was my entry point right there. And I did it basically sat there for about 5 or 6 minutes, and then I got this one little pop here. And so as a result, I got in. That was my entry point. I set this up as my stop. And if you want to say, well, why that stop? If you look to the left, you'll see right there, right below that pivot low of not even the pivot, it was just essentially that low print right after the open. I used that as my stop. And so consequently, when I caught the bounce off of 29, I basically caught it up to about 29.59 or 60, and that was where I set my exit point. So I ended up getting 2-to-1 on this trade. So in one sense, so part one of the day, I lost on this trade, which was my core setup. But then on part two of the day, I ended up catching a nice little trade off of something, essentially something that's not really my setup, and it's something that's effectively off the charts, but it's really more of just something that one knows about the markets and IPOs and all that. So anyway, so then when next time you see an IPO come out, you should keep that in mind, because it oftentimes will end up leading to a good trade. So at any rate, that is that. I want to thank you guys for listening, and I will catch you next time. Anyway, take care. Bye-bye.